we'll try and get an answer to that very question when we talk with our special guest. We're going to be joined by Todd Crosland, Chief Executive of Interbank FX. Todd will be with us after this message, so stay tuned to hear his perspective on the market. Some economic data released just ahead of the start of our program from ADP showed that their forecast of employment growth for the month of March showed a rise of about 106,000. This contrasts with forecasts that the non-farm payrolls number we'll see on Friday will be up 150,000. So once again, the ADP figure projecting a weaker than expected number. Let's welcome our special guest. We're delighted to be joined by Todd Crosland. Todd, of course, the Chief Executive of Interbank FX. Todd, always a pleasure to see you.
Thank you, Bob.
And, of course, Nick Hastings from the Dow Jones Newswire. So, Todd, you know, Nick raised it just before we went to break. There is still an open discussion out there as to whether the Fed's next move is to cut rates or to raise them. What's your forecast, and what kind of timing can you expect?
Well, I think we're seeing mixed signals in the marketplace, as Nick talked about, whether it's going to be the next move will be a rise or a cut. And we had some interesting commentary out of the Atlanta Fed last week regarding their view on interest rates, as well as their forecast for the dollar. So right now it appears that there's not a lot of impetus for the Fed to cut rates while there's still some inflation worries out there.
Meanwhile, the dollar would typically be making a little bit of a move higher once you see some of the risk appetite resuming in the market, as evidenced by the resurgence of the carry trades. Why isn't the dollar responding in typical fashion this week?
Well, I think it has to an extent. When we look at the carry trade, we have internal signals and chart recognition pattern systems. And on March 19th, we had a really strong buy signal on the dollar yen. And that was confirmed again yesterday to buy the dollar yen with a projected target in the 120 to 122 range. So while the market has had some mixed signals, we still think that carry trade's alive and well, and that we're projecting a target in the next 45 days of 120 to 122.
Got it. Let's bring in Nick Hastings here. Nick.
Hi, Todd. The subprime mortgage problems haven't really been very much on our radar over the last few days, at least. I mean, but do you think that this really is still a problem or still does pose a threat to the dollar going forward, or do you think this is something that the market is now convinced really isn't going to spill over into the rest of the U.S. economy?
I think from what we've seen, it's really, there is an effect, but it's going to be a minor effect on the overall market. We've had a lot of commentary from the Fed regarding this in recent weeks, and while it is an issue, we don't think it's going to be a global issue that's going to continue to affect the market.
But, I mean, do you think that in any way that it'll affect consumer activity in the U.S.? I mean, that seems to be one of the prime arguments here, is that, yes, it is essentially a small, limited problem, but it still could have an impact, or will have an impact on U.S. house prices, and if so, that should cool things down and perhaps have an impact on the consumer itself.
That's definitely a possibility, and that's where if the housing market continues to cool, and that's when we could possibly see a rate cut towards the end of the year. But as it stands now, it appears to be a segment of the market that's being affected, that it's not completely widespread at this time.
Todd, back to your projection of a 120 to 122 target on the dollar yen trade. Do we need some sort of a catalyst to sort of make that rally take place, or is that simply going to be a result of trends that are already in place in the market?
I think it's results of trends that have taken place. Our system, we use a sophisticated chart pattern recognition system that basically looks at mathematical formulas, and when those patterns are completed, our systems project a target for a given currency pair. And the first strong buy indication was given to us on March 19th, and then that was confirmed yesterday on two continuation of a triangle pattern being completed with a projected target of 120 to 122. So it's basically a technical analysis system and not based on any geopolitical input. So based upon mathematical formulas, we're projecting a 120. It's actually 120.40 to 122.44 in the next 2 months.
Got it. And then finally, Todd, at the risk of being a little too short-term, I presume that trading levels have slowed a bit this week. I know a lot of folks have been distracted with some of the religious holidays, and we do have the long weekend in the U.S. as well as Europe coming ahead. Do you expect things? I mean, do we just basically sort of ignore the action in the market this week and then say when we get back to full trading next week, that'll be more telling as to exactly what kind of condition the market is in?
Well, we could actually see some more volatility because of this on Friday. I look back to Thanksgiving weekend. There wasn't a lot of liquidity in the marketplace, and because of that, we had some huge moves in in the euro and the sterling that weekend, and that could be exacerbated this Friday with maybe not a lot of the banks in and light trading. So in a thin market, this news on Friday could actually see a significant move.
Indeed, you often don't have folks taking the other side of the trade. Well, we want to extend our thanks to our special guest. We've been talking with Todd Crosland, Todd, the Chief Executive of Interbank FX. Todd, thanks very much for being with us today.
Thank you, Bob.
And of course, Nick Hastings from the Dow Jones Newswire.